Hey everyone, hope they're having a good day. My name's Andy. My channel's Finding Value. Today I'm going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in, take a look, and see what's going on. If you want to follow me at _finance, and if you want to join our community, finding-value.com. If you guys like looking at and trying to find potential investment opportunities, you can join. We do that together in the community. You can go to the Q&A sessions, or you can send it to me beforehand, and I can look at some of the charts for the companies that you guys are interested in. I've looked at a lot of different charts, probably many, thousands of companies since starting this website, and I would look at them before anyway. I would also, I know the fundamentals of a good, maybe 100 or so companies or more. And I kind of stick to with what I know, but I definitely can take a look at whatever you got to. Discount code is special. Special is the discount code if you'd like to join. So against all odds research, Vietnam is hitting a new 100-day high. There it is breaking out. And what does this mean? Well, it's that when capital rotates and gold starts to outperform the S&P 500 and all this stuff, emerging markets start to take off because of the weakening dollar. Vietnam and all of these other areas are no different. It is all part of the cycle. And if you know the cycle, it can give you confidence to buy at the bottom of these areas. And that's where you get the early entry points. The early entry points gives you the big, fat, asymmetric opportunities that we look for in the markets. Now, you're going to have to be patient because obviously it's still going to have to move, and it takes time to move up. It's not crypto that goes up $10 a day, in some altcoin that, 10% a day, I mean. But a lot of these areas, they're good investments. They're solid. They pay good dividend yields. And with the currency starting to go down, money's going to rotate differently in the markets. Garrett Goggins says, every day that goes by and gold stays here or moves higher, the average gold price for Q1 2024 rises. Now it is $2,816 an ounce. Average institution doesn't believe. They will when results are posted. So what does this mean? Let me break this down. Commodity companies make their money off of the price of the commodity. And what people, I think, tend to forget is you don't want a short-term spike. A short-term spike will not benefit the company's cash flows. What you want is a steady gain that holds on to these gains. As you move up, that means that the companies that produce ounces every single day, they produce, sell at higher prices. And if they sell in January, February, the 30 or 31 days in each month, you want a high price, a high average price, because that's what pushes cash flows into the company. So higher prices that stay high are really good for gold and silver mining companies, if it's gold in this particular case. Same thing can be applied to copper, oil, whatever it is. So if you have higher prices, you want them to be sustaining higher. You don't want them to drop back down because it won't transfer back into the company's cash flows. Gold versus the 60-40 portfolio is breaking out, says Jordan. It says, as you would expect with gold divided by the S&P 500 breaking out, this ratio is breaking out of a 10-year base. That's capital rotation. Have to wait until month end to confirm, but look, we're breaking on up. Now, you know what happens? This is the first breakout here. Gold and silver breakout first, and then oil's going to come ripping behind it. And so is uranium. Uranium's going to come ripping behind it. But you have to have faith in the bull market that is coming. So bear with me here. This is our leading indicator. Leading indicator, 1970s, it broke out. This really broke out. I mean, this was a ripper. And then we ripped again. Here we are, and I don't know how fast this will go. It could be very quickly as money rotates. But when you're this early and you're a patient investor and you've learned to be disciplined, You can go bottom fishing in uranium and oil and energy service and all these different areas, emerging markets. You can look around right now and you can pick stuff off and no one cares. When this starts to go up and you start to see money starts to flow into all these different areas that I just described there, people are going to FOMO in later. But right now, no one's looking. Now's the time to be greedy when others are fearful. That's the time to be greedy. Just Dario, look at this. Look at all these interest rates going up. That's a sheer vote of confidence. That's huge deflation here. No, it's not. This is all inflation. We've got an inflation problem, guys. That's why you're breaking out here and you're seeing interest rates go up. And eventually, the interest rates are going to drag down the overall stock markets, like the S&P 500, the NASDAQ. It's going to drag them lower if they continue higher. So the Federal Reserve banks, they're probably going to try to slow the move of interest rates going up. They don't want it to be disorderly. But this looks disorderly. Wow, this is clean. So this is CPER is in the final stages of a breakout above the neckline of a cup and handle pattern. You know what else has a cup and handle? Silver does. Look how clean this is. Oh, this looks nice. For CPR, that's United States Copper Index Fund, ETV. Looks good. Looks very good. And that is not, that is very inflationary here. Ontario's Doug Ford warns of Trump recession threatens electrical shutoff. So this is Ontario's Doug Ford. They're talking about electricity. And then the next one below it, I found this searching, and they're similar. It says the U.S. considers emergency powers to restart closed coal power plants. Under the national energy emergency, we've got to keep every coal plant open, said Interior Secretary Doug Burgum. And if there had been units that have been shut down, we need to bring those back. Kind of sounds like nuclear, too. What's going on here? Well, if there is a problem, I guess, with Canada, maybe we need those coal power plants. Maybe the increase in artificial intelligence in the demand for electricity, maybe we need those coal power plants. I think coal looks pretty good down here. I really, really do. I have a couple of picks on the website if you guys want to know what they are. And I just recently entered them, if you want to know. Scott Sheffield, one of the main reasons Pioneer sold Exxon was that we are running out of inventory. Yeah. I think that's kind of happening across all of the shale in the United States. They're running out of tier 1 inventory. Logan Matashami says, honestly, if we're going into a recession, soon the 10-year yield would be much lower today. So he's looking for maybe a potential lower yield if we're going into recession. But smarter minds prevail. It says, not if investors still harbor fears of inflation returning. Plus, spreads typically widen during recession. So expecting mortgage rates to fall in the event of recession is far from a sure thing. Could we get an inflationary recession called stagflation? We could. What would that look like? Increasing interest rates with a declining dollar. We haven't seen that. And I think that is throwing me off too, because I look at a lot of data that has been from different market conditions and comparing it to market conditions today. And today I'm like, man, we could see a recession with inflation going up. And I think that's got a lot of investors on the wrong footing here. They think recession deflation or recession disinflation. Disinflation means a lowering rate of inflation. Deflation means an outright contraction in prices. I'm in the camp that we've got a problem with inflation, and that is exactly what the bond market thinks, to some degree at least. That's why these are all going up here. These guys. They're all going up because of inflation, not deflation. So I think there's a strong probability that you could have stagflation. It says, do we watch The Big Short or The Margin Call tonight? The one I like The Big Short. But I also Margin Call is good too. What I would call it of what's coming is the new movie is called The Big Long. The Big Long is going long in commodities and precious metals. That is the big long. The Big Short, yeah, that was the housing market and all that and the margin call, but the big long is coming. His assertion is 100% false. And he's talking about the U.S. unfortunately made it too easy for people to compete against American citizens for the precious homes that are in our country. So he says his assertion is 100% false. The facts are immigration was low in the 70s and 80s, only slightly elevated during the bubble, and low in recent years. Those are the only 3 times in the last 60 years home prices have spiked. Appreciation was muted in the 90s when immigration spiked. So what this comes down to, guys, immigration's not a huge driver of home prices necessarily. That's kind of what he's saying. What he is saying is it's all about supply and demand. And right now we are way underbuilt, irrespective of immigration. Just because you have immigration doesn't mean that home prices will be expensive. If you are short and you haven't built enough homes and more people are looking to buy homes, supply and demand, home prices go up. And looking at history, there were times where we had immigration with low home prices, and we had instances in history where we had incredibly low limit immigration and super high increased home prices. It's all about supply and demand. Gold and silver are flying today or yesterday while stocks got crushed. Wait until oil joins the party. It's coming. I 100% agree. Gold has never had a bull market where oil didn't follow. And gold's been running since, September, October of 2022. And we're going to have oil join the party here. And we are going to fly. The companies are so solid, it is ridiculous. And right now, they're being brought to the woodshed because people think a recession, deflationary, disinflationary, and I think they are wrong. I think we are in a wave 2 pullback, in a 5-wave move, and an Elliott wave move. If you guys want to look what Elliott wave is, go check it out. Here's more information about what I think is coming. It says, do not ignore this shift. Relative returns relationships change over time, and recognizing the transition points can help to overweight exposure to assets going through a positive revaluation. This is commodities relative to the equal weight SPX. So it's USCI divided by RSP. And look what's happening, a breakout. The commodities bear market ended in 2022. That's also in a similar location when gold was starting to take off. But the complete bottom was 2020 here. That was the bottom for commodities against the S&P 500. Now we're starting to break out against it. We had a big consolidation, and it's starting to move again. Inflationary. You can't have deflation and have commodities break out against the SPX. I'm sorry. You could have an inflationary slowdown, much like the 1970s, and that's what I think is coming. Here's GDX divided by SPY, the S&P 500 ratio. Man, if you've been following me for a while, here we are breaking out. The beginning of the commodities bull market is just starting to kick into gear. We're right there getting all these breakouts for a variety of different things. GDX, the mining companies, is one of those things. And yes, the S&P 500 could fall some while these go up. It's a combination of both things. Becoming clearer suggests this shift is not temporary. Obviously, we will see pullbacks and counter-trend moves, but suggests years of outperformance of hard assets versus growth stocks. David Burrows is really killing here. This is gold in relationship to QQQ as it starts to break on out. Double bottom. You can draw the line through here, and that's a double bottom, and we're going to break out and move a long way. Gold's going to outperform. The mining companies will probably outperform. And then you're going to see oil, rip it. Uranium, rip it. Natural gas, rip it. Coal, rip it, rip it, rip it. They're all going to rip. It's all coming. And this is the leading indicators that I look for are these things. That's why I'm sharing them. Every new decade trend starts small. Silver miners versus the SPX. Look at silver miners versus that. This thing's ready to go, baby. This thing is ready to go. Look how low. Look at such a great entry point here. Everyone is sleeping. They're sleeping. This is such a great entry point. Oh my goodness. Uh, BOZ or B ounces, whatever it is, billion ounces. Silver will be over $300 in this cycle. I expect gold to be 10 to 12,000 bucks an ounce, and a gold to silver ratio of about 30 to 1. So study this chart and see why over $300 silver is not so crazy. And since this is a cup and handle pattern, it could go higher, a once in a lifetime opportunity. So yeah, I agree with that. And it looks like more people are catching on. I've been watching this since 2018, 2017, down at the bottom of this handle. And a lot of people were predicting even back then that this was going to be a cup and handle. In some of these predictions, back in 2017, 2018, Hubert Muhlman, I used to read him every once in a while. He was predicting some crazy pricing in silver with logarithmic fractals. When he was looking at logarithmic fractals, he was getting prices over $1,000 an ounce. Now, is that going to transpire in reality? I don't know. It could. I really don't know. I mean, I see a lot of people calling for like $300 an ounce silver, but it could go up to 1,000. Now, does that mean that that's going to happen in a year or two? I don't think so. I think that's the big long-term bull market for silver and the increase of interest rates. So that could take a while. We saw silver do incredible things all the way from the early 1940s to 1980. It was a 40-year bull market. So maybe we hit $1,000 an ounce, 20 years from now or something. Maybe, I don't know. Rock bottom entries. So the gold to silver ratio has broken down. Silver is unleashed. You bet it is. This thing's ready to go. The real energy transition is the shift of burning coal from the US and Europe to China. If you look here, you can see China is burning a whole bunch more coal. And you can see that the bottom here, total Europe and US has been declining. So we're just shifting it around the world. And this is still increasing for coal demand and consumption in exajoules. Egg prices have plunged 25% in the last week. Nobody is talking about this. Well, since he said nobody's talking about it, I'll talk about it. Here, I go to the store, and sometimes the store is almost completely out of eggs, just in total. So I hate it. I eat a lot of eggs, so I hate this. I don't like it. I want, I'm fine with paying a little bit more money, but not having it all together. That's not cool. I don't like that. Because I like eating. Commodities overall are the cheapest they've been since 1960. They provide a good hedge against inflation. Really, you don't say. Yeah, look how cheap we are down here. And I think we're ready to rip at any second. I mean, we're ready to rip. I love it. I love it. Here's Eric Nettle. We'll talk a little bit about Eric Nettle and his opinions. He always likes to share his opinions when oil's down. He goes, what we believe to be true is the recent sell-off in oil has more to do with risk off than OPEC returning barrels to the market, and it is greater than $15 below fair value. Drill baby drill is toothless, and despite what the energy secretary said yesterday, oil at $66 an ounce or $66 a barrel is in the death zone for growth. U.S. shale is nearing its peak rate, and go-forward growth rates will be below consensus. OPEC's spare capacity is less than people believe, and over the next 18 months will likely only be 1 million barrels per day of real barrels being returned to the market. Global oil inventories remain low and will remain below average levels. Non-OPEC supply will peak in the next few years, and it equals significantly more power market share to OPEC in the years ahead. Natural gas has entered a multi-year bull market due to LNG build-out, and new demand for power and is no longer a bridge fuel, but rather the fuel of choice. At our $70 WTI and $4 NYMEX base case, we can find stocks trading at greater than 15% free cash flow yields with decades of stay flat inventory. Uncertainty equals opportunity, in his opinion. It's my opinion too. I agree with him. Here is below. GDX is now breaking out big time versus the SPX, says Grady. Means gold miners will outperform the stock market from now on. This chart below was also one of many charts that helped us catch the latest big low for PM miners at the service. There's the big low. And here we are breaking out. Looks fantastic. This is a great entry point to be that aggressive if he actually purchased it. It's a really good thing. And you know how you do that? This is a false breakdown. How do people buy false breakdowns? You have to have conviction in the big bull market. You have to know the big picture. You have to know that we're squeezing into a corner and that sometimes they get a false breakdown and scare people. Retail investors get scared real easily with price movements. And I think they do that on purpose to steal your shares at ridiculously low prices. Good thing Jamie cashed in $234 million in stock a few weeks ago. JPM is down 18% in a month, less than a month. Considering the size of JPM and what it does to the economy and its role, this is a crash. JPM was one of the first noted stocks to crash in a dot-com year. Interesting. Here is as it's more like decline, baby, decline at $50 a barrel oil. You can throw out the idea that U.S. shale oil producers will grow if oil averages in the 50s. This is just wishful thinking. And here we are rolling over in oil production already. So it is not drill, baby, drill. It's decline, baby, decline. There we go. Gold versus SPY, another one that is looking fantastic. We've got a breakout here. This is guys, this is such an opportunity. I hope you guys take advantage of it. The gold and silver mining companies, I think, are going to do incredible things. And I think gold's going to outperform the SPX here going forward. Looks fantastic. The street is as bearish crude oil as it was in March 2020 when planet Earth effectively locked down. It says, the fools. What's your view on oil? I'm incredibly bullish because I have to be when everyone else is bearish. People send me messages about how bearish they are in oil. It makes me more bullish and it makes me even want to buy a lot more. I buy as much as I can anyway, but an oil bull market is coming. It's going to be a big one. It says, when the time comes to buy, you won't want to, says Walter Deemer. Correct. When the time comes to buy, you don't want to because you're scared. There's fear in the market. You don't want to do it. We talked about that one yesterday. So that's what we've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We've got a midweek update that's released today if you want to check it out. This is where I go over individual companies. You can see the charts. You can see the ones that I like. There's some really good entry points in some of these silver companies. There's some good entry points even in the energy space and energy service. But that's what I've got for today. We'll catch you next time. This is Finding Value.